Warm welcome to all of you. If you've not introduced yourself, feel free to keep doing that in the chat. We'll keep an eye on this throughout the session. My name is Robin Wauters. I'm the founder and CEO of Tech.eu, which is an information portal, market intelligence platform for anything related to European technology. And I'm delighted to have Will join us from London, I assume. From the UK, really, from London, to talk about investments in this COVID-19 era. But before we do, maybe a quick introduction. Will was fortunate enough to join venture capital firm Accel about a month or two before the lockdown sort of kicked in, but I'll let him explain sort of his background and what he does at Accel.
Yeah, great. Thanks, Robin. It's awesome to be here with you and also to all the entrepreneurs and other folks joining. And thanks also to UPPSTART for hosting this great event. It's awesome to be here. So yeah, briefly on Accel. So we help ambitious entrepreneurs to build iconic global businesses. We were founded in Silicon Valley around 40 years ago now. We've been on the ground in Europe for 20 years and in India for 15 years. We operate as one global team, but with the benefit of local insight. We've been very fortunate to partner early, typically around the Series A stage, with many category-defining companies over recent decades, companies like CrowdStrike, Slack, Spotify, Supercell, and UiPath. And you know, we partner with these companies through the ups and downs over a number of years, and we're very proud that at this point, over 150 companies that we've invested in have gone on to IPO. I personally am, as Robin mentioned, I'm part of the European team. I'm based in London, joined the firm following about a decade of European software investing. And I'm really excited to talk about this topic today. I know it's top of mind for many of the founders I've been speaking to, and very, very topical. So happy to jump into it, and thanks again.
Great, thank you, Will. Definitely top of mind. I remember when this whole notion of COVID started sort of coming to Europe. I would say end January, beginning of February, there was already a lot of talk about what could happen. And then, of course, it was sort of a shitstorm from March onwards. And we have lots of conversations with entrepreneurs, investors, of course. So we were sort of afraid, well, not afraid, but we were sort of expecting things to slow down tremendously. I know a lot of investors kept saying, you know, we're going to keep going, business as usual. A lot of our entrepreneurs were panicking, but still, as they tend to be, quite optimistic and hopeful, still carrying on. And then basically, sort of, if they were already in fundraising process, just continuing the process, and otherwise, just seeing what would happen. But there was a lot of uncertainty. Now that we have the benefit of hindsight, we're a few months in now, we look at the numbers and we don't really see a slowdown. We see a little bit of a slowdown when it comes to early stage, but in reality, it's been quite amazing how active the investment community has been in Europe, but also beyond. We see this in the numbers, we see this in the stories that we get. But I'm wondering, from an investor perspective, is that also what you subscribe? Is this also what you noticed in the market?
Absolutely. I think when we look at the high-level numbers on the whole industry, I think PitchBook put out a report recently saying there's been 18 billion euros invested into European tech companies during the first half of this year, which is really bang on line with what we saw last year. So there's really been no slowdown. From our perspective, we've made 8 new investments just since March, and have had over 15 follow-on investments from our portfolio. So really seeing a lot of activity. I think you raise a really important question, though, and a very interesting one from our perspective, which is, why is that? Why, in the face of this global pandemic, haven't we seen more of a slowdown? And the way I'm thinking about that is really 3 main reasons. The first is that, as we've all heard, digital transformation has radically accelerated. So I think Satya Nadella said it best a few months ago on Microsoft's earnings call, when he said, we've seen 2 years of digital transformation in just 2 months. And I think what's especially interesting about that is this is across the board. So this is learning, teamwork, sales, customer success, cloud infrastructure, security. It's really broad. And so because digital transformation across all industries has accelerated, that's creating a very exciting environment for technology companies to be selling products into these industries. So that's really supported companies' performance during this period. I think The second factor is actually more on the investor side, which is when you look at the capital available for investors, and I'm talking about private equity, venture capital, there's never been more capital sitting in the funds of all of these investors. I think as of January of this year, it was 2.5 trillion was the aggregate amount of so-called dry powder sitting in these funds. And so it's just simple supply and demand that there's a finite number of companies and this capital has to be invested. So that's actually leading to more competition and more investment appetite across all phases of the private capital financing landscape. And we see that all the time. And then thirdly, which is I think also interesting, is VC's relationship to the public markets. So it's a well-researched phenomenon, actually, that despite the fact VC is a long-term asset class, typically with 10-year time horizons, it's surprisingly linked to the sentiment in the public markets. And as we all know, we've seen all-time highs recently. Software valuations have more than doubled since the start of 2019. And as we've been seeing on the markets, software and technology companies have performed very strongly versus approximately a flat S&P 500, and many of the top performers have more than doubled in the past few months. So this is all encouraging investors to participate, not least because we saw so many interesting companies founded during the last crisis as well.
Well, thank you, Will. That's a great summary. I think you're spot on. As you mentioned, a lot of the tech giants are doing quite well, benefiting quite handsomely from the crisis. Also, a lot of startups are benefiting. If you're in the productivity space, online communication, online entertainment, education, healthcare, remote healthcare, that sort of thing, this has been a boon. This typically resulted in a lot of companies scaling a lot faster than they would have imagined at the beginning of the year. But of course, there's other companies in other sectors, travel technology, for example, booking websites, if you're catering to the retail and hotel space, this is a really, really bad time, obviously. So have you seen that also in the deal flow that you get, like the type of entrepreneurs and businesses that you see coming through the door? Have they sort of shifted to the sectors that are now benefiting from this crisis, or is it still pretty much across the board?
It's interesting, as you say. I mean, we heard just there was an interview with the CEO of Airbnb recently who admitted that their revenue had dropped 80% at the start of this crisis. So it's true that there have been some industries very severely affected. Others, interestingly, we're speaking today via Hopin, which is one of our investments in the virtual event space. As you can imagine, they've seen a huge surge in demand. So it's really mixed across the board. To your question of what have we been seeing in terms of deal flow, I think the exciting thing for us in general, for us investing in Europe, is there are so many different categories of companies and entrepreneurs which have such strong teams. So actually, we've continued to see deal flow across all the different sectors that we're active in, which includes consumer companies, fintech, marketplaces, and software. And we've been making new investments across all of those. I would say clearly travel, retail, hospitality have been hit harder. So we've probably been seeing a bit less of those. But hopefully the strong companies will also bounce back.
Yeah. Do you think most investors sort of have a reflex to double down on their winners, or still talk to entrepreneurs about investment, but only those who've already sort of engaged in conversations before COVID hit? Or do you think there's also still opportunities for these first-time founders that nobody really knows to still get into the room?
I strongly believe it's still a great time to be a founder, and there's opportunities for new founders. I myself have made an investment during COVID of a founder I only met remotely. He's a first-time founder, and we've not disclosed the investment yet, but absolutely these types of deals are happening. That said, when you look at the data, it's certainly true that investors are doubling down on the most successful companies. So we're seeing more later stage investments, higher valuations, and a sort of concentration into companies who've proven that they can execute in this new environment. So I think both are happening, but it's certainly an exciting time to be an entrepreneur across all different stages, I think.
Yeah. And what about geography? Because of course, if you do these meetings virtually, it sort of levels the playing field as well. You no longer have to be in proximity to an investor's HQ to actually pitch your startup, right? So do you also see that in the deal flow? Do you get more pitches from across Europe, maybe even the remote places, Eastern Europe, etc.?
Yes. this is one of the things that is just most exciting for us at Accel investing in Europe, that we're seeing global champions being born anywhere. As you know, Robin, we were early investors in UiPath from Bucharest, companies like Miro from Perm in Russia, companies from Aarhus in Denmark. It really doesn't matter to us where companies come from. It's more about the Silicon Valley state of mind and having the ambition to build a global company. And so, no, during the pandemic, if anything, we've just seen more diversity, because there's less interest, candidly, in where you are, and more about how you're building your team, be it remote or what have you. And in addition to how you're building your team, I think it's becoming easier to build a global go-to-market. So it's easier for a European software company now to sell into the US market, because it's not just about being in the room with your salesperson. People are more used to purchasing via Zoom and other channels. So I actually think it's a great time to be starting a company wherever you happen to be.
Yeah, well, very much agree with that. But I'm also wondering how that works practically, because of course, there's no more travel, there's no more events. So the amount of people that you can actually meet in person have gone down tremendously. So how do you personally get your deal flow? How do you make sure that you still keep tabs on sort of the activity in the entrepreneurial space across Europe?
Yeah, it's a key challenge that we're always thinking about. And of course, for any investor, seeing the right companies and meeting the right entrepreneurs is critical. So for all the entrepreneurs out there in the audience, by all means, we'd love to connect. But to answer your question directly, Robin, we actually end up partnering with companies that we meet through all kinds of different channels. So it can be events like this, and virtual events, I think, also work well. We reach out ourselves to entrepreneurs who are working in sectors we find particularly interesting. We receive introductions from other entrepreneurs that we've worked with. So, for example, in my case, when I invested in Darktrace around 5 years ago, that was actually an introduction I received from another CEO who I'd worked closely with. So I think it can come via a network of people, or just via a cold email. I think a tip I would have for founders out there in terms of the best way to connect with investors, maybe a couple of things. One is start early. So it's hard enough building a relationship with an investor to get an investment and partner for 10 years and do that via Zoom. It's even harder to try and do that in the space of just a few days. So treat this as a real relationship building thing. Start early, and let's start talking way ahead of your potential round. The second thing is, focus on a relevant set of investors. So it's not, you as a founder, it's incredibly time consuming to build these relationships with investors. So save some time and really only focus on those who are active in your country, or your geo, your category, your stage. And I think, and when you reach out to the investor, it's great to be highly personalized. So, let me know why it is that you think Accel would be the right fit, or portfolio companies we've invested in before, and that will already, really help to establish that credibility and start the relationship on a helpful footing for both of us.
Yeah. Can you maybe share some more tips and tricks? Like, for example, do founders have to acknowledge COVID and sort of put it right there in their pitch deck, how they're handling this, what they're doing to sort of cope with the situation?
I would say acknowledge COVID, but don't be defined by it. So whether it's been positive, neutral, or negative, share your narrative on this. But then let's move on and talk about the strategy for your company for the coming years. We're not backing businesses on the basis of just short-term trading, whether that's negative or positive. We're much more interested into the vision of what your company can become. So by all means, acknowledge it. But even more exciting is when you can show how you're actually going to benefit. Maybe there's some talent in the market that you're able to bring into your company, or there's new opportunities or partnerships that weren't possible before. So, but don't linger on it too long is what I would say. It's not the basis for any of our investment decisions.
Yeah, I think that's good advice. So you're in the room, you've had the virtual room, you've had the meeting, it's successful, the partnership wants to continue with an investment. Then we get to the due diligence process. So how do you handle that in these times?
really interesting, how this due diligence has transitioned to the remote world. I think the key takeaway for me of founders who've been successful is to be highly transparent in your approach. So, and highly structured. So what I mean by that is it's going to really help in the whole process if you have some great information ready to share, have references ready to provide, be ready to open up members of your team for us to get to know as well, to share the culture. I think when entrepreneurs have that lean forward, transparent mindset, that's when stuff can get done over Zoom. So that would be my main takeaway. I think the other really important one, speaking with founders who we've invested in during these past months, is the importance of just really getting to know each other as people and as partners as well. So when we invest, this is typically an 8 to 10 year partnership. And it's really hard actually to get to know people well via these structured kind of Zoom meetings. So what we try and do is set aside time for a Zoom coffee, or if possible, a socially distanced walk, and just have some open-ended discussions and kind of be comfortable with your prospective investor as well. So those would be a couple of tips for when you're in the throes of the diligence.
Yeah, those are some great tips. Thanks for sharing. I can't believe we already only have about 3 minutes left, but I'm going to try and get 2 more questions in. One is, how do founders sort of deal with what comes next? Because nobody knows how long this is going to last. There's going to be a high degree of uncertainty. The markets will shift. So how do you propose to founders that you've already invested in to sort of deal with what's coming next?
I think you're absolutely right, Robin. The takeaway I would have is be prepared for some macroeconomic whiplash. So it's quite possible that we're going to see severe volatility in the markets in the coming months. Don't be shocked by that. It's probably going to happen. So prepare yourself mentally and organizationally for that. So that means ensuring you have adequate runway. Typically, we're advising companies to be raising 18 to 24 months runway to ensure they have enough buffer. But I think most importantly for the founders out there is that state of mind of resilience and agility. So that would be my advice. But I think it's going to be a rocky road in the months to come. That's for sure.
Yeah, certainly. We have 2 minutes left, so I'm going to ask this question as well. Any anecdotal stories that you want to share about mistakes people have made with this whole remote pitching thing, or obviously you don't have to name names, but maybe some specific instances of things that went wrong that founders can avoid in the future?
I would say to that, Robin, don't let technology let you down. So the number of meetings I've had where there's been a poor quality mic, or the internet connection has failed, or I've not been able really to hear the entrepreneur correctly, or even they've not been able to share the materials they wanted to share. It's just, don't let that be a barrier to you achieving what you want in your company. So that would be my advice of things not to get wrong, is just, use technology to your advantage rather than the detriment.
Yeah, and get the basics right, I guess.
Yeah.
Great. Any other parting thoughts for budding entrepreneurs in the room?
No, as I say, it's great to be speaking with you today, and by all means, would love to connect. I wanted to ask you, Robin, just in closing, if you had any thoughts from what you've been seeing in the trends, or advice for entrepreneurs that you could share as well from your perspective at Tech.eu.
That's a good one. You're putting me on the spot there. But I would say, entrepreneurs, almost per definition, are optimistic and very resilient and very creative in sort of solving problems. And I would advise not to think about what COVID might do to the world and society as a whole, and sort of double down and focus on the problem that you're trying to solve without getting distracted too much. Obviously, it's going to affect the world, your world as well. But at the end of the day, when we get through this and the market's back and everything sort of goes back to semi-normal or a new kind of normal, you still want to have made progress. So you still want to have focused on your customers, on your team, make sure the culture still, that you've invested in the culture still goes. And then just building the right relationships with partners, customers, investors. Just keep doing that, even though it's more difficult to do this remotely. I would say just carry on.
Yeah, would absolutely agree with that. Thank you.
Yes, we promised the organizers to have a little bit of a Q&A session with you all. So if you want to stick around and ask a few questions, I know Will doesn't have a ton of time left, but I'm here as well. So if you want to ask me any questions, maybe not related to my LinkedIn profile, but I'll get to that one. Yeah, if you have any questions, just put it in the chat. We're watching it, and I'll be happy to share the question with Will.